Hey there, it's Tom Ryan, founder and CEO of ICR. Before we get into the next episode, I wanted to ask that you subscribe to the show. It'll help us get even more unique and interesting guests on the podcast and in turn continue to educate management teams and the growing ecosystem that creates value for fast-growing private and public companies. And while you're at it, head over to Apple Podcasts and leave us a 5-star rating. Very much appreciated.
We're seeing Larry Fink on TV saying tokenization is the future. We're seeing Paul Atkins, chairman of the SEC, get on TV and saying not only is tokenization the future, it's coming in the next few years. He says he thinks securities trading is going to be moving onto blockchain soon.
When someone like Larry Fink says tokenization is the future, it's tough to ignore that. But acquiring and managing tokenized assets can be a tall order for the average retail investor, which is where today's company comes in.
If you don't want to do the custody yourself, you don't want to do the staking, you don't want to do the borrowing and lending and asset management yourself, then a treasury company, and specifically Solmate, is probably the right choice for you.
My name is Tom Ryan, and this is Welcome to the Arena, the ICR podcast. Each week, I sit down with today's business leaders to give you an inside scoop on some of America's most prosperous public companies, their origins, their challenges, and the keys to their success. Marco Santori, Chief Executive Officer of Solmate, which trades under the symbol SLMT. Marco is a treasury company pioneer, launching the very first altcoin treasury on Nasdaq. Prior to joining Solmate, he was a partner at Pantera Capital, where he helped to structure some of the industry's best-performing treasuries. He's a trained attorney, once dubbed as the Dean of Digital Currency Lawyers by the Editor-in-Chief of American Banker, and he was the Chief Legal Officer at Kraken for 5 years, one of the world's largest digital asset exchanges. Prior to Kraken, Marco was the president of blockchain.com, as well as a partner at the law firm Cooley, where he led the firm's global fintech team. He's also been an advisor to the International Monetary Fund and an IMF delegate speaker on financial technology in Asia, Europe, and the Middle East. Let's enter the arena with Marco Santori. I want to kind of start at the basics for a lot of listeners here who may not live and breathe crypto every day like you do. What exactly does a blockchain enable that traditional financial infrastructure simply can't do, and why is that so important right now?
The real innovation in blockchains is that instead of data being stored on a bunch of different ledgers with only trusted individuals and intermediaries who have access to those ledgers, data is stored all on a single ledger. So you can imagine like what happens when you go out and you buy a cup of Starbucks coffee. There's a ledger that Visa has that keeps track of who's spending what. There's another ledger that the bank has, that Starbucks Bank has, that says, you actually do have the money, right?
Yeah.
Once it comes out of the pocket of the guy buying the Starbucks coffee. Then you've got Starbucks ledger, right, that says, okay, we sold 1 cup of coffee, and so on and so forth. And the reason that is because you can't just give anybody access to your ledger, right? You don't know if they're going to write true information, false information, whatever it might be.
Yep.
You can't trust them, right? Ledgers have to be trusted systems. But what blockchains do is instead of having just a single individual or a group of individuals who are trusted maintaining the ledger, it decentralizes those ledger updates so that anybody can join the network, and so long as they're running the right software, they can update that ledger. And that ledger can say whatever you want it to say, just like, a typical database that's stored on a server, or if you're just keeping a list on a piece of paper, right? You can make the list say whatever you want it to say. The real innovation is that the technology behind that list is one that allows anybody to write to it, even people you don't trust. And so the first thing people used that list for, that ledger for, was keeping track of money, Bitcoin.
Yeah, and listen, Solmate was built on Solana, is built on Solana. What is Solana, and why did you choose that specifically?
So the Bitcoin, like I said, was the first ledger.
Yep.
Solana wasn't the second ledger or the third or the fourth. There's been a lot of different blockchains out there since. But whereas Bitcoin is really just good at sending money back and forth, Solana is good at other things. It can run DeFi, for example. You can run smart contracts on Solana. And what smart contracts are, if you haven't heard about these things yet, or if you haven't dug deep into them yet, is automated business logic. You can put together a whole number of steps of business logic, and those will run in an automated fashion, in a decentralized fashion, without you having to trust the people who are running it because the ledger does it itself. And so you can run things like automatic exchange of different tokens.
Yeah.
You can run things like custody requirements. You can program if-then statements like, if it rains in a certain geography, then you can buy or sell a certain asset. And you don't have to trust a third party like a broker or your own server or a bank or anybody to actually run that business logic. So it's more robust than Bitcoin. You can do more with it.
And developers, for those reasons, are attracted to build things on Solana, correct?
Yeah, that's right. That's right.
Yeah.
And because Solana can do more than just move money around and keep money like Bitcoin does, developers want to build on it. It is the fastest growing. It is the fastest.
Yep.
Because it's a newer technology than Bitcoin. It runs faster, can process more transactions per second. It's the most used blockchains in terms of number of transactions per second. It's a growing ecosystem. And we think it's the perfect treasury asset for that reason, because it is growing. Its nearest competitor is much more highly valued with much less usage and we think much less potential. But it's also natively yield generating, unlike Bitcoin. To generate yield on Bitcoin, it's actually really difficult to do. You can mine Bitcoin, but that requires a lot of electricity and specialized hardware. And you get something for that. You get a lot of security on Bitcoin.
Yep.
But for Solana, you can generate yield natively. Right now, the staking yield is around 6.4%. And that makes it an ideal asset for a treasury company. Plus, it's volatility.
Yep.
It's volatile, and volatility drives volume.
Yeah. And so, with kind of that as a foundation for the conversation, Marco, talk about Solmate. What exactly is the company? From an outsider looking in, the real key is just to differentiate yourself. You have done that. Now it's getting people to understand it all. What is Solmate? How do you explain what you do and what you're built for?
Solmate started in September. We raised $300 million in a PIPE transaction, private investment in public equity. And there were some other treasury companies raising money right around the same time. And we are built to accumulate SOL faster than you can do it yourself, SOL being the native currency of the Solana network.
Yep.
So we handle the custody, we handle the staking, and we also can participate in asset management strategies on the stake that we have on our validators. So on top of that staking yield of 6.5-ish%, we can generate additional yield by borrowing against that stake and using that stake weight to do interesting things on the Solana network, like building real infrastructure. Because staking SOL allows you to confirm and validate transactions on the Solana network, others want to be near to you. They want to be near to you while you engage in that validation, because their transactions will be confirmed faster. They will be confirmed in the right order. And that's really important to developers. It's important to traders. That's something that we can do better than a lot of other companies can do, because in partnership with one of our anchor investors, Rockaway X, we have built our own bare metal validator. There's actually a piece of metal. There's a rack stood up today in the UAE validating transactions. And what we want to do is start selling co-location services and other services to traders and developers to set up right there next to us, geographically near to us, so that their transactions will be confirmed in the right way and we can charge a fee.
Just at a basic level, for people who don't understand, is a validator really like computational power, something that helps execute transactions? Is that kind of what that is? And it's so different than a lot of these other digital asset treasury companies that they went public, they're just accumulating the native token or whatever. I mean, what you're doing is like super different.
Yeah. We definitely want to accumulate the native token. That's a goal for sure, but the way we're going about it is different.
Yeah.
What most of those folks are doing is like a pure asset management strategy. They'll stake their SOL and they'll collect a yield from the stake weight, and they borrow against the SOL in cash and then go and invest the cash. It takes a lot of work. It takes risk management. It takes all these things that you would expect your typical investor to want to pay somewhat of a premium for. But what we want to do in addition to that is use the existence of that stake to generate revenue itself. So we can earn yield on it, but the existence of that stake on the network means something. It means something special for Solana and other high-performance networks. When you have stake, when you have a lot of SOL and you put it to work on a validator, what you're putting it to work doing is validating transactions.
Yep.
You are in charge when you have a validator. You're in charge of deciding which transactions are valid, which transactions are invalid, and what order those transactions ought to be confirmed in. That is a really valuable ability. And the network pays you a little bit for it, but participants on the network will pay you even more for it.
Yeah. It kind of goes back to that original point. The blockchain itself, because of its strengths that you described, has the best chance to create a fast-growing ecosystem with a lot of stuff developed on it. You're putting yourself in a position, if I'm understanding you the right way, to have kind of the rails that it runs off of, and it's powered by this digital asset strategy as well. So you have the ability to create infrastructure as well as use the digital asset strength to help create an operating company on top of the digital asset treasury.
Yeah, that's right.
Am I in the ballpark there?
That's absolutely right.
Yeah.
So, the digital assets are mostly valued by something called the MNAV, the multiple to net asset value, right? You've seen Michael Saylor do this for a few years now. When their market cap is trading above their net asset value, they sell stock and they go out and they buy Bitcoin with it.
Yeah, they're financial engineers at this point.
Absolutely.
Yeah.
It's financial engineering. It is a capital markets flywheel. We're set up to be able to do that too. We think it offers value for investors. It allows us to grow the treasury. But I think if that's all you do, you're leaving money on the table.
Yep.
And that's of particular importance to high performance networks like Solana because they are based on this concept, proof of stake. When I say you're taking your stake and you're putting it on a validator to confirm transactions, Bitcoin doesn't have that mechanism, right? So for high performance blockchains like Solana, you want to be able to take advantage of that mechanism. You want to be able to sell additional services on top of that capital markets flywheel. We call it an infrastructure flywheel. We want to be able to sell infrastructure services on top of it.
And invest. Am I correct in that, in maybe applications being built and invest in the whole ecosystem over time? Is that correct as well?
Yeah, that's right. That's right. We'd like to invest in the ecosystem, and there's a number of different ways to do that, right? There's a world, right, at some point off in the future where treasury companies could be the Berkshire Hathaways of their ecosystem.
So Solana, like other similar networks, are enabling high-frequency trading on-chain. I wanted to know from Marco whether this would pave the way for fully digital capital markets where trading, clearing, and settlement could all happen in real time.
We're seeing Larry Fink on TV saying tokenization is the future.
Yeah.
We're seeing Paul Atkins, chairman of the SEC, get on TV and saying, not only is tokenization the future, it's coming in the next few years. He says he thinks securities trading is going to be moving onto blockchain soon. This is not just paying lip service to the industry. These are deeply held beliefs from the people in power who actually make these decisions.
Like the most powerful people.
Yeah.
It's not some guy on CNBC, you know what I'm saying? Like if Larry Fink says it, you got to pay attention.
100%. We agree, and that's the world we're building for. To the extent that securities and other real-world assets get traded on-chain, we think they're going to primarily be traded on Solana. Solana is highly performant at the base layer. Tens of thousands of transactions per second today is the potential throughput of the network. And tomorrow, hundreds of thousands of transactions per second. That's the kind of speed that you need for sophisticated financial markets. And I think you want to see those happen at the base layer of the chain, not happen using some third party's scaling solution, not happening using some third party's private secret server where you don't know what's going on and they're introducing security holes and visibility holes and all the rest. We think Solana is where that's going to happen. And it's not just, hopes and dreams. We're actually seeing the beginnings of that today. We're seeing RWA, real world asset trading happening on Solana today.
Yeah. It's super interesting. And I know, just keeping with the Wall Street theme, I know you've said you're effectively building a new Wall Street. Why does that next generation of financial infrastructure, why is maybe the Middle East the best place to start, particularly Abu Dhabi? Why is that a strategic place for you to focus on?
There's two reasons why Abu Dhabi is important for us. I'd say the UAE, generally, but Abu Dhabi specifically is important for us. The first reason is the one that I think most people would think of, right? There's lots of capital in the UAE. And that's true. And that's important for us. We think that that's a really good place to focus for treasury, a growing treasury, because treasuries, they suck up capital, I should say fiat capital, right? They suck up government money and they generate with it coins, whatever coin the treasury is focused on. For us, it's primarily dollars and SOL on either end.
Yeah.
And that's important to us. Proximity to capital matters. But it's not just the proximity to capital, it's also the geographic location of the UAE. If you were to draw a map of the Earth, you'd see on the east coast of the United States, you'd see some validation occurring. You would see some central limit order book servers of different exchanges being run. Then you'd see the same thing going on up in Northern Europe. You'd see the same thing going on the other side of the world in Tokyo and Singapore, but you'd see nothing in the middle.
Yeah.
You'd see just nothing, right? And for Bitcoin, for Ethereum, for these slow networks, they're good at what they do, but they're slow. The distance between you and the validator, between the transactions, it's not all that important. But when you're trying to run high performance transactions, when you're trying to trade quickly, and when that's all happening on chain, latency matters. And so we can put a hub in the very middle of these spokes. And where that hub would be, if you were to draw the very center of everything going on Solana right now, you would draw that hub right in the UAE.
Yeah.
That's hugely important from a latency perspective because the speed of light affects these transactions. You want to be close to your validators, and that's what we're doing. We are creating a new gravitational center for Solana, right where we think it ought to be if you were just pointed a map.
Yeah.
So it's geography and it's proximity to capital.
Yep. There's probably a reason you're the CEO of the company. You have an amazing legal background, and obviously there's so much that goes into understanding the industry, the ecosystem, all the regulations around the world. How does that experience kind of allow you to balance innovation and compliance and risk management so that ultimately you're the winner at the end?
I think it allows me to be realistic about the possible transactions out there. It's easy to have big ideas, and it's important to have big ideas.
Yep.
Of equal importance is that balance between, I know it's going to be hard, but let's try it anyway, on the one hand, and this is never going to work and we should be doing this other thing instead. Those two notions, if you can have those at the same time for the right products and the right endeavors as a company, it's critical. And working as a lawyer in securities regulation and even as a courtroom lawyer in my earlier days has been really helpful in helping to size up the opportunity set and to be able to set up execution against it. That's invaluable experience for me.
I know you talked about Solmate kind of as an institutional gateway to blockchain investing. What does institutional readiness mean for you? We're sitting here talking in January of 26. Feel like everything is changing around the world. What does that mean to you?
I really do believe that blockchains are going to bring equality to a lot of different financial transactions and a lot of real world transactions because those transactions will start to occur on these open, permissionless ledgers that anybody can participate in. And so I think it's going to change our notions of what institutional really means. The institutions will change for sure, but so will the structure of markets. And the existing market structure for securities today, for example, is largely driven by the technological limitations at the time they were built. The markets needed something more efficient than a window for paper to come in and out of. And so we built electronic trading. But the technology just wasn't there to do it all on a single ledger. So we had to opt into what was a net settlement system. And that's what we have today. We have a net settlement system where brokers can clear transactions internally. They can clear transactions with each other. And then ultimately, they can appeal to third-party clearinghouses. That's super inefficient. We lose track of securities all the time as a country. The Chiquita banana case is a great example of that, where there were, people thought they owned securities that they didn't really own and vice versa. That would not have happened if the technology was better, and that cannot happen if all those transactions are happening at the base layer on blockchains. So I think as market structure changes, we're going to see blockchains take advantage of that.
Yeah.
And we want to be prepared for it.
Is it obvious who could be hurt the most by this, by a real, tectonic shift over the next 10 or 20 years? Is it obvious that it's kind of the banks and the brokers and things like that? And do they know it? And how are they acting to either be a part of it or impede it? What's your take on that?
I don't know. I definitely don't walk around thinking, oh, the banks are all done for or the brokers are all done for, right?
Yeah.
We're still going to need brokers. We're still going to need banks, even in the world that we envision at Solmate.
Yeah.
I think that a lot of the Wall Street plumbing that exists today will become obsolete, like a transfer agent, right? A transfer agent is just a total anachronism that is in place today because of an inefficient database system. We need them because of the ancient way that we keep track of securities. If securities are traded on blockchains, you don't need the transfer agent for that. That's one participant in the market that we think should probably be relegated to the dustbin of history.
Yeah.
But you still need banks, right? Yes, banks act as depository institutions, but that's not all they do, right? They also participate in the money creation process. They participate in monetary policy and the expansion and contraction of the money supply. Mostly been expansion lately, but that's what they do. And so that's not going to change, right? We're still going to need to exert monetary policy, even if assets move on chain. So I think they'll take on new roles.
Yeah. I was watching CNBC this morning and Trump gave a long speech. He did mention crypto and the regulatory framework in the U.S. It felt like he got into office. There was a huge amount of momentum. It kind of paused a little bit. What do you see in the U.S. right now?
I still see the momentum. I still see the positivity. There's no question that Trump's election was a net positive for this industry and a net positive for financial markets moving forward. Now, you can argue about the effect of his foreign policy on asset prices, right? But when it comes to modernizing the plumbing that runs our financial system, the advent of crypto and the application of blockchains to those systems is a huge boon.
Yeah.
It's certainly a net positive.
And then in terms of partnerships, I know you have some partnerships in the industry and that matters. What kind of strategic relationships are you prioritizing as CEO and how do you think that's going to shape the company over the coming years?
So we've been partners with Rockaway X since the beginning. We built our validator together. We rely on them, for the hardware of that validator. They've done a fantastic job. If you go to our website right now, solmate.com, SOLMATE, you can see how our validator is performing, where it is, and all the rest. And they've been fantastic partners for that. The Pulsar Group, who act as sponsors of our original PIPE transaction, they have been instrumental in our success in the UAE, in the things you would consider like, getting the meetings that you want to get and sitting down with the people you want to sit down with. They've been fantastic for that, but also acting as advisors and guides in the Middle East as well. Really irreplaceable.
And then we talked about balance and compliance and innovation and things like that. When you look out over the next 24 to 36 months, what kind of innovations excite you the most? What do you see coming down the pipeline that most people either don't understand or don't see that Solmate can take advantage of to help the company grow and expand?
Yeah, I look forward to more robust DeFi protocols out there, DeFi being decentralized finance.
Yep.
When Larry Fink and Paul Atkins talk about the tokenization of securities, they're talking about, like I was saying, a change in market structure and markets moving from just these, siloed centralized databases onto public and permissionless ledgers like Solana. But when that happens, where will these assets trade? Will, Nasdaq have a smart contract on Solana where brokers who have, seats on Nasdaq can actually participate? Is that how it's going to work? Do you still need that sort of cumbersome net settling structure anymore? I think you don't. And I think what you need in replacement of that is a decentralized exchange, which is indeed a smart contract. They exist today. There's a bunch of different exchanges on Solana, on Ethereum, on other high-performance blockchains that allow you to create a central limit order book, for example, or to do automated market making, all within what's called a decentralized exchange. Basically, all the functions that an exchange and related parties play collapsed into a single smart contract. That's what's going to drive the tokenization of securities over the next few years.
Well, one last question for you. I have to imagine that one of your strengths is translating complexity into clarity as an attorney, as someone at Pantera, as doing everything you've done in your career. I don't even know if you would say we're in the first inning of all that stuff, maybe in the batter's box of what's about to come over the next few years. But how do you sit down with Solmate's marginal investor, someone who has capital, who's interested in the space, but they just don't have the level of understanding, certainly that you have, or that some investors have? How do you break this all down to say, look, here's the investment thesis, here's why you should have some exposure to it?
Yeah, it's a great question. Look, tokenization is happening. Assets are moving on-chain. How do you get exposure to that movement? How do you take advantage of this trend that we know is happening? It's like, well, you could just buy the native currency of the chains that all these assets are going to be moving on to. And as people use those chains, the price of the assets are going to go up. You can just go out there, you can just buy Sol.
Yeah.
And frankly, I would encourage you to do it, particularly if you want to participate in that system. If you want to figure out how custody works, if you want to figure out how DeFi works, you want to do atomic swaps between one chain and another. If that sounds interesting to you, you should go out and do it. But if that sounds complex to you and it sounds like a level of granularity you don't want to get into, Solmate is a great way to get exposure to that trend.
Yeah.
And when the price of those assets goes down and the trend seems to be cooling, so will the price of Sol, and so will the price of Solmate. I think that's probably inevitable. But you're going to see the same thing happen on the way up, generally speaking, right? This is exposure to that trend and to this asset as a directional bet on the trend. That's what we offer. If you don't want to do the custody yourself, you don't want to do the staking, you don't want to do the borrowing and lending and asset management yourself, then a treasury company, and specifically Solmate, is probably the right choice for you.
That was Marco Santori, CEO of Solmate. They're definitely not just another digital asset treasury company, but rather an institutional infrastructure company accelerating Solana's growth, doing so by combining off-chain capital strength and on-chain technical expertise. It's a real flywheel with a lot of levers to create value, and that makes Solmate a very exciting company to watch. I'm Tom Ryan. We'll see you next time back in the arena.
References to specific stocks are not intended to be recommendations for specific trading behavior. Comments presented on this podcast are intended for informational and educational purposes only, and do not represent opinions or recommendations on whether to buy, sell, or hold shares of a particular stock. All investors are advised to conduct their own independent research into individual stocks before making a trading decision. In addition, investors are advised that past stock performance is no guarantee of future price performance.